Hi there, I'm Verified Champion Trader Kevin Davey, and today I'm going to share with you what I'm trading in November 2025. So let's get to it. Before we get started, if you haven't signed up for my free Algo strategy, now's the time to do so. Hit the QR code or enter the link you see at the bottom, or in the description, you'll find a link. Sign up, you'll get this free Algo and lots of other great information. All right, today I'm going to show you what I'm currently trading, or at least some of the strategies I'm trading in November 2025. And again, for anyone who doesn't know, I do algo trading of futures. So algo trading is where you program the rules into your trading platform, the buy and sell rules, and then they're automatically taken by the trading platform. Right now, I'm trading 21 different algo trading strategies, and I've divided them up pretty much evenly across all sectors. So meaning the ags and meats are one sector, 3 strategies, 3 metals, 3 energies, 3 stock indices. You get the point. Everything's 3. So that adds up to 21. But this way, you get a nice diversified equity curve because you're trading a whole bunch of different things. So maybe this month metals will do great and stock indice strategies won't do so great, but they're going to kind of balance out. So this way you're covered in a lot of different markets, and that's one of the big things that I advocate without my algo trading. Now, I'm just going to show you the equity curve after January 2023 to the present. So these strategies were all developed before that point. So it just gives you an idea of what the performance of these 21 has been since that point. Now, I didn't necessarily trade all these during that time because I switch out what I trade every month. So treat everything as hypothetical. That's a big one. Just because I'm showing, hey, this is a nice looking equity curve, don't assume that you'd get the same results. Treat it as hypothetical. And of course, just because an equity curve has looked good doesn't mean it's going to continue. All 21 of these strategies could break tomorrow. Chances are they won't, but you never know. And so if you go into it with a mindset that, hey, whatever the past, that's nice to know, doesn't guarantee it's going to happen going forward, it's going to make you a much more effective algo trader. Here are the results for the 21 strategies. Again, this starts in January 2023. And you can see they really took off the last year, sort of year and a half. And before that point, it was a little rocky, although it was still up. But that's what trading, what I'm calling one unit is. And the way I determine that is for, let's say, stock indices. If I'm trading the ES, I'm going to trade one strategy, one contract of each strategy. But if I'm also trading wheat in this portfolio, maybe I'll be trading 3 contracts of wheat or 5 or whatever for every one stock indice. So these are all per one unit, but that might be a different number of contracts. And then once I have that settled, then I can scale up for my particular account size, or you could do it for your account size. So first you scale with the sectors and try to balance everything out, and then you would try to size for your overall account size. And when you look at the history over the past couple of years, it's roughly about $400 profit per strategy per month. Okay. So here's a couple examples just to kind of give you a feel for it. I'm not going to reveal everything about all the strategies, obviously, but this is a gold strategy, 345 minute bars. And you can see it's made historically more money to the downside than the upside, which is kind of interesting given that lately gold's been on a tear up, although it has had some pretty big downtrends. So you got to kind of watch out for that. And you'll notice there's a lot of flat periods. That's just when the strategy says, hey, I'm not really sure what's going on. I'm not going to take any trades. So if you look at the last few trades here, it didn't take a trade, then it took one, got a profit right away and got out, and then just stayed on the sidelines. So these strategies don't necessarily trade every day or every hour. They could be out for extended periods of time, and that's okay. A lot of people think algo trading, you got to be trading all the time. No, trade when your strategy thinks it has an edge. That's how you do it. So that's a gold strategy. Here's a natural gas strategy. Again, same sort of thing where it doesn't always trade. It does have pauses in between. Now this one's interesting because it makes so much more money on the short side. So it doesn't make too much money on the long side. Didn't take too many trades actually on the long side. So this one doesn't even trade that often, but when it does, it's been doing pretty well. And I'd just share the code with you for this particular strategy, at least for the entry part. Now, I'm not sharing the exit part, but this one uses 200 bar momentum, and then it looks for a close above the moving average. So then you have what I would consider a longer term trend is up. That's the first momentum. Then a medium term trend is up. That's the second term. And then it says if the RSI is really low, the 2-bar RSI, which was popularized by Larry Connors, then it says buy, and basically the reverse for selling short. So I just thought I'd share that one entry with you just so you can kind of see how some of these strategies are set up. Now, obviously not all of them are the same way or with the same rules, but that just gives you a sense of what I'm doing. And again, that was for the natural gas 1440 minute bars. Third strategy I'll look at is corn. And you can see that one doesn't have those flat spots. So this one tends to trade quite a bit more. And it stays in trades longer. The theory here is corn, usually when there's signals in corn, there's usually an extended run a lot of times. So it makes just about as much money from the long side as the short side, which is kind of nice. So I'm kind of positioned right if there's a big uptrend or a big downtrend. But that's how it's done over the past years. In both, this is both walk forward back test, and then the latter part of the curve is after development would be what could be considered real-time performance. And I'll show you the entry for this one too. This one uses a range, and it's looking for a range, a daily range, or in this case, that's bigger than 2 times the standard deviation plus the average range over the last few bars. And I also use a momentum here to buy. And again, to sell short, it's looking for the opposite on momentum, but it's still looking for a big range. And I've used this over the years in a few different strategies. This entry actually is from a soybean strategy that I did, I want to say at least 15 years ago, so it's an old one. But it seems to work pretty well for corn. You can see from those entries, they're usually pretty simple. These are pretty typical of what I do. I do have some more complicated ones. I do have some more simple ones. But just in case you didn't believe that normal entries and simple stuff, that it would actually work, yeah, that works. Now, some of the performance might be due to the exits, which I did not share. Maybe if I get enough likes and enough comments and enough views, maybe in some other videos I will share some of the exits that I'm using. If you'd like to see that, make sure you give it a thumbs up. But in this case, I'm just sharing the entries. And by the way, both those entries, the way they're set up, they are stop and reverse. So if you were long and got that short signal, it would actually take that short signal. So first it would exit the long, then it would go short. That's how TradeStation's normally set up. You could put some code in to prevent that, but that's the way it's set up. They're both set up as stop and reverse. Now, I will say about exits, not all of them necessarily that I trade have stop losses, and I know a lot of people get really upset at me over that because how could you not have a stop loss? Oh my gosh. There's a reason. A lot of times stop losses, especially little ones, just reduce your performance, just kill the strategy. Now, emotionally, psychologically, stop losses can be really good. It's hard trading strategies without stop losses. Trust me, because I do that on some, and you watch it go down hour after hour, day after day, and you're like, when's this going to turn around? Because you're hoping for a reverse signal. So that is hard. But a lot of times, performance-wise, that's actually better. And the last point I want to bring up is that all of these strategies that I trade are all developed with my trademark strategy factory process. It's a proprietary process. I actually teach a course on how to develop strategies with my process. So it's something that I've used over the years and refined, and it helps me develop strategies that tend to do better than most at risk-adjusted returns. What do you think? Leave your comments. What are you algo trading now? What markets do you see as hot? What's really working for you? What's not? Let me know. I answer all comments. And give a thumbs up if you like this, and I'll keep making more. I'm Champion Trader Kevin Davey. Have a great day.